Hi everyone, good evening. We'll just start in 30 seconds. And I'm sure you know today's topic. It's a very interesting topic. Let me know if you can see my screen. So are you able to see my screen? This is just a test. Cool. So yes, it's 6:31. Wonderful. Hope you're all doing good. I'm sure things are looking better from wherever you're joining. From wherever you're joining, yes, Naresh, I'll have a look at it. Wi-Fi is laggy. Okay. So just in case if there is any kind of a power cut, we are facing a lot of power cut today. And if there's anything, okay, just give me 1 minute. I'll just switch it off. I'll just switch my Wi-Fi. Just 1 second. Hope this is better now. Thank you so much for the feedback. And yeah, let's start now. We are 2 minutes past 6:30. I hope everyone is doing good from wherever you're joining. Just say a hi. So I just want to talk about Mr. Peter Lynch's strategy today on focused investing. Can I just get a thumbs up or something to see if everything is fine? Are you guys there? No. Let me just see. Hi guys, are you there? I can't see anyone, so I'm not sure if everything is working fine. Can you just say a hi or something? Sorry about this. Just 1 second. Is it fine now? So looks like there's a bit of a lag. Not sure, so sorry about that. Let me just try as much as possible to solve this up. I hope it's fine now. We are already 5 minutes past 6:30, which is it fine now? Are you able to hear me clearly? Okay, just give me 1 minute. I'll just switch over to another room and to a different Wi-Fi and connect. Just give me, okay, now I think, yes, we can hear you now. Thank you so much, Vignesh. Thank you, Gautam. Let me not waste your time. I'll just, video is blurry. Okay. Okay, without any further ado, I don't want to waste your time, so I'll just stop my video. Okay, great. Just 1 second, and we are starting now. So yes, as I was saying, today is an interesting topic. We are talking about Mr. Warren Buffett, Mr. Peter Lynch today, right? So let me start by sharing my screen and going off the video, if that helps. Great. So I'm starting with the one of the most famous books written in the investment space by Mr. Peter Lynch, One Up on Wall Street. How many of you have heard or read about One Up on Wall Street or read Wall Street, One Up on Wall Street itself? Have you guys heard or read? Okay, okay, okay. Then let me start with a good introduction of Mr. Peter Lynch himself. Peter Lynch is an American investor, and of course, as most of the investors do, he ended up becoming a philanthropist after a certain point in time. For those who don't know much about him, he was managing, he was a fund manager of Fidelity Magellan Fund for close to 13 years, and this was way back in 1977 till 1990. This is where he became the legend that he is. He averaged a return of 29.2%, okay, consistently more than the S&P 500, and that too, he used to beat S&P 500 by a good margin of 100%, which means S&P at the same time gave about 14% return. Of course, this led to a lot of success, and he retired at a young age of 46. And of course, at that point in time, this fund was the best performing mutual fund in the world. This is a brief introduction of Peter Lynch. What was his investment strategy? There are three-pronged strategy that he used to do. He used to believe in bottom-up strategy. Bottom-up strategy essentially means that you don't really have to look at thousands of stocks in a sector. He believes that you should look at a stock and analyze the stock itself. Instead of going first on the sector, then understanding the top 5 stocks, then choosing one among the top 5, he used to believe that if you like a story, as he says, story about a stock or a company, just start analyzing the company. And if you like the analysis, start investing in the company, right? And his investment philosophy, most of the times, was investing in small but fast growing companies. Did you get his bottom up story investing strategy till now? Okay, I'm just asking questions so that I make sure that everybody is here. If you could just respond, it'll be great. So, did you understand his bottom up storytelling strategy? Cool. I'll just move on to the next one from link. Okay. What was his stock selection process? By the way, this session, I'm just going to talk a little more about his process and the methodology and the portfolio creation, and then maybe we will concentrate on a set of questions that you will have that I also have for you. I have few other questions for you also, so please stay till the end and also keep updating me if everything is looking fine and stuff like that. So the selection process for the stock was, he always used to say, like I was saying, the bottom up strategy or the story strategy, he always used to say that please look at in and around your area or your trade. If you're into business, look at stocks or companies in your businesses or around your businesses, around your trades, or as a consumer of the product. So if you really like and are a repeat customer of a company, then it means if that company is listed, there should be something good about the company. So this is what he used to say: go and invest around the knowledge that you have. You may not really want to invest in a SpaceX building astronaut, which is building rockets and stuff like that. He just wanted you to invest in companies that you really, really understand. So what are the next step he used to say is that please examine the company's plans. So for example, if you want to know what are the plans for this company to increase their earnings, right? Are they doing reduction of cost? Are they raising the price? Are they expanding into new markets? Or are they selling more in the older markets that they are already present in? Are they revamping or closing or selling their loss-making units? These are the 5, 7 ways of increasing their earnings. And is the company that you're involved in trying to do any of these to increase the earnings? If so, then maybe it can be a good part of your selection process. I'm just giving one example of increase the earnings. There are many other things, but I'm just trying to highlight one of his selection process. And therefore, as I mentioned in the first point, the more familiar you are with the company, the better edge you have in evaluating the company because you understand the company in and out. I will give you an example of a company called Swiggy, which we all use for food delivery. As a consumer of the company, I believe that company is doing a lot of good stuff. Good stuff. For all you know, if it was listed, I may have gone ahead and invested in that company. Forget the price and all this stuff. Just assume that if it was available at a good price, I may be one of the investors, early investors in the company. By the way, this is not just a recommendation. I'm just trying to tell a story. If you're an end user, if you're a consumer, you should look at evaluating the consumption that you're making and the companies that are getting benefited out of your consumption. Did you get this point till now? Guys, I just need you to say yes or no, whatever it is, but just want to make sure that you're all getting this point clearly. Super. Where do companies in India disclose their plans on how they plan to raise income? No, Naresh, you don't need to, see. For example, if you're consuming a soap and a soap brand, and if the soap brand suddenly increases the price, it means that you're seeing, and seeing is believing. When you say company, you understand a non-full-time trader what to look for. For example, let's say, did you buy a car recently? What are the analysis that you did, and why did you buy that particular car, Gautam? There are so many positives about the car. It means that the company that is a manufacturer of the car will also be doing good. Keep these questions flowing. Very nice question, Gautam and Naresh. Thank you. Wonderful. Now, this is a little texty, little wordy. Just bear with me. But I wanted to get this point, very important point of Peter Lynch. What is the portfolio building process? Or what was in Peter Lynch's mind? What is his philosophy? These are all from his book, right? There is no point in diversifying just for the sake of diversifying, which I see a lot of us investors doing it. We buy 100 companies just for the sake saying, "Arey, thoda risk kam ho jata hai." But if you don't understand the 100th company and its process and its way of increasing earnings or reducing costs, what's the point of buying that particular company in your portfolio? And if you strongly believe that the 100th company is adding value, then maybe adding that particular company can help. But I have seen that beyond 20 companies, for a solo investor, it's very difficult to track the in and out of that particular company. So for all you know, you may stop at 20 or 25, but a lot of us, I have someone whom I know has 126 stocks. I told him, you rather buy an index. It's as good as an index itself. So this is exactly the problem with we investors. We diversify too much. In the process, we end thinking that we reduce the risk, but we end up reducing returns a lot more and not commensurate to the risk. The second point is you should believe in exciting prospects and should add them provided they clear the tests of your research. What I mean to say is that let's assume that you already have built a 25 stock portfolio and there is this 26th company which is very exciting. Then it still makes sense because there is a different kind of a value it brings to your portfolio. May not be the diversification value, may not be the reduction of risk value, may be a different point altogether. And that is when you can add that particular company in your portfolio. As I mentioned, a lot of people invest in different categories of stock. Okay, for example, I invest in banking, and then I go and invest in technology, and then I go and invest in auto. Was if you understand all these, of course, well and good. But if you don't understand all these, the more far you go make or your core competence, the lesser you know about the company, which means the lesser you'll be able to track the performance of that particular company. Hope you got this point clear. Okay, it doesn't mean that you invest in one single stock. Of course, I differ with him here. I have a two stock portfolio. I differ with him here because I am so very convinced, going by his own principles, that I ended up investing in two companies. There are tremendous amount of risks of doing single stock, two stock portfolios. I have seen beneficiaries of it. I've also seen people getting hit very badly because of it. So when you're going to go this route, please make sure that you have covered your bases very well. So, but his point is, don't invest in one single stock alone. Yes, I think this is very, very clear from my understanding of all these legendary investors. They are not traders. They don't commit short term at all. They commit for long term and believe in the growth of the company and don't believe in the share price increase of the company. Again, one more important point, which I tell every day, but still I think there's a long, long thing way to go. Market timing is close to impossible. You can get it right, maybe you're lucky once, but try getting it right again and again and again. You will know that market timing is impossible. But then there are two people who get their market timing correct. First one is God, second one is a liar, right? So remember this, market timing is close to impossible. And finally, just because a stock or a company that you invested in went up doesn't mean you should sell. Instead, Lynch suggests that you do some rotation, in the sense selling the company and replacing it with another company with a similar story. Remember this word, similar. He always is harping on that story, which is similar but better prospects. So let's say if you're an investor in an XYZ bank, that bank has shot up. Now the other bank is also coming up. Maybe you want to sell that X bank to buy the Y bank. This is all he's talking about rotation. There is a sector rotation strategy. There's a stock rotation strategy. This is exactly what Mr. Lynch has been recommending to us. Did you get this portfolio building point correct? Now is the exciting part, guys. I'll talk to you about some real life examples of Mr. Lynch's strategy in India after this. But I just want to make sure that you got the selection process correct and also the portfolio building process correctly. Let me know if you got it correctly. Akshay, good question. No, when you talk about, isn't it better to just get, yes, Naresh, I think if you don't have the time and the wherewithal of understanding markets, understanding stocks, I strongly believe that you should invest only in mutual funds, because we are busy in our world, you are busy in your work, everybody is busy. So instead of wasting our time on our own analysis, we should do, invest in mutual fund. What do you mean by target? Impossible. There are no trends. I mean, as I said, actually, yeah, maybe you're a technical trader or your friend is a technical trader who may get some trends correctly, but nobody can predict the bottom and the top of the market ever. Correctly twice, maybe once it's fine. Okay, now let me show you some Indian examples. Do you remember Bullet? How many of you fancied Bullet? I did. I did a little late. I mean, I was not into bikes, but I did go into the craze for Bullet and bought my one and only Bullet, which is TB Thunderbird 500 in the year 2017. I was a little late to the party, but I for sure know a lot of my friends had a gang of Bullet owners and all that stuff. Just see the impact of craze for a stock. If you're a consumer of a company, see the stock price move up significantly because there are repeated consumers. Can you relate to Bullet? Does anyone have a Bullet here, by the way? Do you guys have Bullet? Anyone? I have a Bullet. I have a TB 500. Okay, nobody. Okay, no worries. Okay, I'm sure the next one is a little more relatable to all of us. This is jubilant food, guys. Pizza. Today, my son has got his pizza party. It's Friday, right? And of course, the pizza is going to come from Jubilant, which is Domino's, right? So there is this definite craze about pizza, which started maybe 5, 7, 10 years back, and see the impact of repeated consumers. All I'm trying to say is that you invest in what you see. You saw Domino's guys going left, right, and center. You saw Domino's opening up its delivery centers nearby, near your home. Near my home, there are three Domino's delivery centers, four actually. So what I'm trying to say here is seeing is believing. I saw pizza guys coming left, right, and center. I invested in Domino's, and if you see in the share price shot up from 200 or 250 or 300 in 2012 to about 4,000 before falling off the cliff. This is what exactly Mr. Lynch is talking about. Being the consumer of a company, you may want to invest in that company itself, provided it clears the other metrics that you see. Got it? Now, let us see another very, very interesting example. This is the branded innerwear. A lot of people don't talk about it, but I'm sure, I remember 2004 when there was this craze of moving away from the regular innerwears to branded innerwears, and that was Jockey. And as you all know, Page Industry is the master franchisee of Jockey, and they revolutionized this market. From a 2,000 share price, it has gone to 42,000, guys. Seeing is believing. Please understand, Jockey is today a well-known brand, but it did this. There was a craze for Jockey maybe 15 years back. Now they are in a lot of other segments. So this is how Mr. Lynch's concept of seeing is believing, understanding what you're consuming, understanding in your own business, in your own trade, and investing into those companies is all about. Can you guys tell me one story of 2022? Any story that you think or that you like? Maybe we can translate that into stocks and see. Maybe we'll note it down, and maybe after a year or two, when we actually meet again, we will be able to see if that is really working out. Some interesting story around you, which can turn out to be great profits for other investors. Of course, you're not recommending. I'm just trying to ask you if there is any interesting story around you. I just mentioned about Swiggy's story. Do you have one? Uday, you can. No. Zomato's IPO, yes. No, Uday, what I'm trying to say is that how do you find such kind of companies? I think you can find them when you consume them. Or let's say if you're in businesses. For example, my investors, most of my investors are from a semiconductor company. It is a real story, by the way. Are in the semiconductor space. They work for a semiconductor company. That company was going through some kind of a turmoil. But then I remember I always used to love the DNA of the employees, the kind of culture that company used to have. Whenever I've been to their office or whenever I've spoken to the employees, I realized that after a certain point in time, the company started winning a lot of patents and lawsuits and all that stuff. I thought, why not invest in this company? And this is not an Indian company, by the way. I ended up investing in that company, and today the price has gone up by 4x from that in 4 years, right? So what I'm trying to say is that things are, and this is not a company that I do consume. I never realized, but this is a company where I could relate to. I was watchful. My clients were working in that particular company. So yeah, my screen is stopped, Naresh. So that is exactly what I was talking about. Seeing is believing. Do you have any company, Bharat Pay? Can we talk about some names which are listed? For example, Zomato is already done. Let's talk about a trend which you think is going to change and can translate to a good amount of returns for the investor. Let's forget the return bit. Let's at least talk about a story that you see is doing well. So, for example, food delivery that I spoke to you about. Anything that you really see working well? Okay, nice. I can see, yes, great ideas. Great ideas by Uday. Bounce and EV companies. EV, EV is a is changing the landscape of real estate, which is linked to what Akshay has written, is changing the landscape, because what I hear more and more is that people, especially all these EV manufacturing firms, especially, are stopping dealership. They're not giving dealership to anyone. They are going to directly go to the consumer and build warehouses in many parts of the country, have a hub and spoke model, right? What I'm trying to say here is that this will lead to two big changes. One is service industry, that where all these automobile companies make a lot of money, automobile dealers make a lot of money, is going to get cut. But real estate, especially where warehouses are getting built, can actually shoot up. So very linked question between Uday and Akshay. Very nice. Yes, Santosh, yeah, absolutely. You're very, very nicely said. Infra, you saw the push in the budget. You're seeing right in front of your eyes, whether it is a metro, whether it is, roads. I mean, they're talking about so many thousands of kilometers to be built this year. I think you're very right. Seeing is believing. The only issue with infra sector is it's very capital intensive. So maybe you just want to be a little more smart and careful about investing in the right set of companies. Don't end up investing in a lot of leverage, a company that has got a lot of leverage. But yes, you're very right on the infra. EV companies, any company, I don't think of, let's say if Ola Electric was listed, I might have invested into it. But I can't think of anything in Ola, in the EV space. Any top things to understand a company? So one is, Santosh, good question. One is you just need to make sure that you understand the core it's core competency. You understand the basics of that particular company. What is the problem that they're trying to solve? If that problem is relatable to you, maybe you can analyze the company better, right? For example, if there is a specific medicine, let's say Pfizer. I'll talk about Pfizer because I can't talk about Indian stocks. If it is a Pfizer, they brought in the vaccines and today they showed some tremendous amount of profits. Okay, there's a flag for it also and all that stuff. Let's keep that argument aside. But they got a problem, they got a solution to that. This is one of the simplest way to understand, to analyze a company, right? So that's first point. Second, and the most important, which I pointed out last time also, which Mr. Warren Buffett always believes in, quality of the management. Just go and see the kind of offices that they live in, the kind of money that they unnecessarily spend. If you don't want to see also, it's fine. If you just do a Reiki around, you may be able to figure out, are they just spending out of the blue? Are they doing the right thing and all this stuff? If you really get these two things correctly, maybe that's a first starting point for you. And then you can do your own set of analysis, financial analysis, and all that stuff to get it in your list, and then maybe invest at a certain price point or so. Yeah, electric vehicles, Bajaj Auto, Nykaa. Yes, okay. I finally got somebody talking about Nykaa. Yes, absolutely. Nykaa is a good example. I think again, I'm not advising you to invest in Nykaa. I don't know the fundamentals of Nykaa. Seeing is believing. I see this cosmetic industry changing in a big way. My own niece is talking about starting a company. My wife's closest niece has already started a company in the cosmetic space. So I'm sure these resellers like Nykaa will end up doing hopefully well. Yes, you're very right. I really like what you're doing. Okay, good point about Britannia. Britannia may do well. This is a very good point. Okay, it's from LinkedIn. So Britannia may do well, but there's a overhang of that airline company, I believe in that, right? So they have, as an investor, you may always be worried saying, what will the free cash flow be used for? What if the board of directors decide that, okay, Britannia is doing well, producing a lot of good money, but then if they use this money to fund the airline operations, because airline is a difficult business to understand and do. So what I'm trying to say here is that maybe at the Britannia consumer level is very good, but at the board level, the free cash flow may be an issue. That's the reason why Britannia may not really do well till this doubt in the investor's mind come out. Yeah, anybody, list of EV Ayurved products. Yes, if you get hold of good companies, if you see, for example, Forest Essentials kind of a company, if you see a Kama kind of company, these are companies, but unfortunately they are not listed. So if they were listed, maybe we get a little more sneak peek of how they're doing, what kind of profitability they are in, and I'm sure I like their products, so I would invest into those kind of companies. For example, guys, okay, my one of my investments, one of the two investments is PVR. I don't know. I mean, the story that I have is, and I keep arguing this with my friend who's an investor in Inox. I keep telling him that PVR is a clean company, solo company into film distribution, also producing decent movies and doing good theaters and all this stuff. And it's more or less become a duopoly. Close to about 5,500 single screens have been shut during, unfortunately, during COVID. So why do I need to break my head over something else? I am a movie buff. I went for a movie in January 2021 also, and also in November 2021 twice or thrice. So what I'm trying to say is that as a consumer, I like the movie. There may be competition from Netflix, Amazon, and all that stuff, but I think the movie experience is different. So I invested in PVR. It's as simple as that. It's as this is the only logic that I have for investing in PVR or any other company that you. So seeing is believing is all I'm trying to say. Any other story? I mean, interesting ones. I like the EV bit there, and I really like the infrastructure one that you're talking about. Yeah. Any other one that you can think of? It'll be great to hear if you have anything other than these also in your mind. Any other questions related to stock picks? So I'm just going to see LinkedIn to see any questions there. Good. Yeah. Okay. No questions there as far as I can see. Okay. Any other questions? And maybe we can just call it wraps. And I would soon like to meet you for my next video or next live stream on Howard Marks, my guru. My company is based on Howard Marks. Shorting the market. Okay, I know what to do there, Naresh. I can tell you what to do there. Shorting the market is provided you are bullish on the company. There are. So let me rephrase this. I'll talk to you about. So let's say you are bearish on the market. You believe that the prices of the shares or the funds or the markets are going to come down. That's the reason why you want to go short on the market. So let's understand the concept at the concept level, right? So you're bearish on the market. Now, what are the ways to make money if your views go right? Let's assume that you sold your holdings, and if the price comes down, you buy it back. This is one of the ways of simplest and the easiest ways to make money is exit your existing holdings and enter back when the price comes down if your view is correct. Let's assume that the view is correct. I mean, again, as I said, timing is very difficult, but let's assume that you got it correct. Now, the second way to do is getting into futures and options. Let me first talk about futures. Futures are in general, the underlying is Nifty or Sensex. Not Sensex, Nifty and various other stocks, right? You say that I will sell Nifty at today, just for an example, at 10,000. If the price is 10,000 and below, okay, you will make money. If the price, at the end of the last Thursday, if the price is above or below, you will make money. If it is not, you will end up losing money. It's as simple as looking at the price, and if the price is above your selling price, you lose money. If it is below your selling price, you make money, and you can square off any time that you want to, right? That is futures. You can buy the next 3 months, you can sell February, March, and April futures if you want to. Every lot, I think, is 50. So you have to, there's a calculation on the margins and all that stuff. You need to take care of it. So the worst come worst, this can happen is your price goes to zero. That's the best position for you. And the worst is goes keeps on going up and up. So the losses are unlimited and the profits are limited, right? This is about futures. Now on the options, when you are bullish, there are two things that you can do: buy a put or sell a call. If you believe that the price is going to be, let's assume that Nifty is at 10,000, and if you believe that the prices are going to be at least below 9,500 in this month, in the month of February, you sell it, you buy a 9,500 put for this month. You pay a small premium, which can be 15, 20, 30 rupees. I don't know how much it is, right? So if it happens, if it so happens that the price goes below 9,500 before the last Thursday of this month, you will make money, right? So the money that you make is 9,500 minus the closing price, which is, let's say, 9,400. So 100 rupees is what you make, minus the cost that you paid or the premium that you paid, which is 30 rupees. Okay, so 100 rupees minus 30 into 50 is what you make. So here the profits are unlimited, but the loss is limited because the loss is limited to the premium that you have paid. 30 rupees, 30 into 50 is your loss. Okay, and on the other side, did you get it till now? I mean, I don't know. Did you get it till now? Okay, on the other side, you can also do one more thing. If you believe that the price of 10,000 will not come at all in this month after now, then you can do something called selling a call. Selling a call at 10,000 would mean that as the price keeps falling, the amount that you sold for, let's say the price can be 195 or 200 today. Okay, you sold it at 195 or 200 and the price kept going down. So the Nifty's price kept going down. So this value will become zero at the end of last Thursday. So your profit is capped at 200 or whatever is the premium that you have sold for. But if on the other side, if it keeps going up, your profit or your losses are unlimited. So these are the two strategies in which you can make by shorting the market, or the best is just sell off your holdings and buy it back later. I'm not recommending. No, I don't have any. I mean, there are hundreds of videos on how to. So it's not investing in futures. It's trading in futures. Investing is never into futures. You should just. I mean, I just try Googling. I'm sure you will get some kind of an answer or so. But no, my recommendation is no. Don't get into that. One last point. We have launched our Wealth School officially now. We are present in. I mean, we are also collecting all kinds of information from you to, and also going to do a large webinar for about 200, 300 people. The coming 19th of February at 11 a.m. There's a webinar that is scheduled. You may want to be a part of it. You may want to use this link and then join or register yourself for the webinar. It's an amazing way where we are going to hire about 100, not hire, enroll about 100 young entrepreneur, young millennials like you, and get them to build a corpus of 100 crores at least. Looking forward to, there's no guarantee though, to build a 100 crore corpus when they actually retire. So you may want to use this link to register yourself. I'm just posting it here. And if you have any questions, feel free to ask me there. Okay, do you get it? Okay, I don't know why it's not going through. I'm not sure why is it not going through, but yes. It's wealthschool100.com, guys. It's very easy. Wealthschool100.com. 100 stands for 100 crores. 100 stands for the number of people we are enrolling in the school. We've got a lot of good candidates already. It's a good place for you to. Let me just share the screen and show you. Maybe that will help. Maybe this is just off. So this is the Wealth School. We are trying to craft in millennials' wealth journey. We are enrolling now. Wellschool100.com. We are on LinkedIn. We are on Insta. We are on Twitter. We are on YouTube. So you may want to click. And this is the webinar is scheduled on 19th Feb and also on 26th Feb. So you may join any of them, and I'm going to mentor along with Mohit Bagri, my partner. Right? Any questions, we'll be happy to answer at that point in time. Great, guys. Thank you so much for being a part. It was wonderful. I hope to see you tomorrow. I mean, next week, Friday, again on Mr. Howard Marks Principle. Please keep pouring your questions and also connect with me offline if you want to. Thank you again and good luck. Bye-bye.